Well, good afternoon, everyone, and thank you for joining us for our webinar this afternoon. My name is Dan Greer with Insurance Advisors Direct, and I'm very excited to have you all joining us today for the second in our series, Preparing for a Mandate-Free 2019. And also joining online today with me is my colleague with Insurance Advisors Direct, Christy Strauss, and I'm going to be handling most of the webinar today, and then she'll be joining you on next week's webinar. So thanks again for joining us, and very excited to be talking about the under 65 health insurance landscape. Last week we covered what the current landscape is. We talked about that. We're going to review that a little bit today, and then we're going to be talking today, we're going to be drilling down more on this paradigm shift from major medical to our limited medical plans that we have available out there. Feel free, if you wish, to type in a question in the chat box, and I'll be able to answer those questions. And keep in mind that we are recording this, and we will make it available for you for future reference if you so desire. You'll be able to get our email addresses at the end of the webinar. We'll have that contact information up there for you. So here we go. Of course, just to review, excuse me. Just to review a little bit, obviously we talked about it last week, and you probably already know that not everyone needs or wants a high-cost, full-coverage major medical plan. You're probably getting requests. Many of you are already writing this type of business, and if you're not, we're here to help you get prepared to do so. Again, just to review healthcare spending statistics, really important here, this one at the top, only 2 people out of 1,000 ever need more than $1 million of lifetime benefits. And most likely, the majority of that is going to be expended after they've reached 65 and are on their Medicare. Again, 57% of the U.S. population spent under $200 out of pocket in 2014. 73% spent less than $500. 5% of the population, that's the most frail and ill among us, they account for over half of the healthcare spending, again in 2015. And 88% of the U.S. population reported being in good, very good, or excellent health in 2015. So we're mostly a healthy nation. A very small amount of people are not in good health and need extra health care dollars. And those folks, yes, we're going to go ahead and say that they probably should remain on a major medical plan with unlimited lifetime maximums and so forth. What we're here to do today is help the folks that can't afford these major medical plans but are in good health. And we'll drill down on that a little bit more. But again, in review, major medical disadvantages. We all know that Affordable Care Act is in its last legs, and even now, recently, in the last week or so, we're seeing that the U.S. Justice Department will not be defending the Affordable Care Act in court. You can Google all of that and look up the articles on it. You know, the providers are not accepting it. The premiums every year seem to go up by 25 to 100% increases in the premiums. The carriers are pulling out. They're pulling out of the markets. Some markets only have, if they have one, they may only have one, but there's many markets out there that have no marketplace plans available. Of course, it's designed for catastrophic coverage, and it doesn't reward you, the agent, for spending your time helping your clients. At best, you may find 3% commissions. Many times it's 0, 1, 2, or maybe 3%. I just wanted to point out also, too, that the short-term plan, it's still a major medical plan, okay? Even though it's short-term, it's still really got the same problems and issues as a major medical plan has. Again, here's some more comparisons, major medical versus limited medical. You got your high deductibles with major medical. Usually for individuals, it's $6,700. Families, $13,500. So these plans don't really do anything until something bad happens. And then, until then, you're self-insuring and paying out of pocket, probably not getting the care that you may need for routine things, such as a sprained ankle. Who's going to go get physical therapy on a sprained ankle if they have to totally pay out of pocket for it, right? So you have to find alternative treatments or limp around. Again, major medical, it's good that there's no underwriting and no pre-existing conditions clause. Again, but if you're in good health, that's not an issue for you anyways. Networks, you got to stay in network for your care. Well, what if you're in a plan that doesn't have nationwide network and you're traveling? Then you may have a problem there. It's a one-size-fits-all type of plan. You cannot customize the benefits. You can't pick and choose. If I were to go out and purchase a marketplace plan for myself, I'm going to be paying for labor and delivery of a child, which I don't believe I need. I'd rather be able to pick and choose my benefits to meet my needs, wants, and my budget. Again, low to no commissions. Just talking with an agent yesterday, she wrote a small group of 5 on Marketplace. The monthly premiums for those 5 individuals altogether, $2,800. She got her check in the mail the other day from this very well-known carrier, $20. So, yeah, well, geez, that's kind of nice. At least she got something. Limited medical, you can see we have low to no deductibles, affordable premiums, usually 30 to 60% savings over Marketplace and major medical. Because there's low to no deductibles, they have access to these routine care needs they may have right away. With the 4 different plans we're offering, they vary from full underwriting to no underwriting whatsoever. We have a guaranteed issue, no pre-existing conditions clause plan, and you'll hear more about that plan next week. Christy Strauss will talk with you in depth on the FlexNet limited medical plans. All of the plans have RX included, as well as discounts on top of that. Use of the multi-plan network nationwide, one of the largest PPO networks in the country. And again, this is the ability to design the plan that suits the client's needs, wants, and budget, hopefully. Most times that's the case. If you can save someone hundreds of dollars on their health insurance, I think you're going to make them very happy, and the generous commission. So, identifying your audience. Here's an example. Health insurance costs for the family 4 times more than the car payment and is more than their mortgage payment. And they're in good health. They never meet the high deductible at all. So, going back to the statistics, this is a very commonplace example here, right? yeah, it's great to have the security and peace of mind of knowing if something bad happens that you'll have an unlimited lifetime maximum. But can you exist at these high of premiums? Here's a good example, side-by-side comparison for you. These are actual numbers for a 2018 marketplace plan. This is a gold plan. 45-year-old married couple, 2 children, non-smokers, Metro Detroit area. Their premium, $1,286 a month with a $7,600 annual deductible, $14,700 maximum out of pocket. $300 deductible at the emergency room, and then it's an 80-20 plan after they meet their deductible. With one of our limited medical plans, we can cover the whole family for $465 a month. If they're concerned about meeting the ACA mandate for the rest of the year, we'd add another $165 on top of that, and there you go. We've cut their premium by half. I think they'd be pretty happy with an extra $600 in their pocket every month. And that's, again, a low deductible plan. And it includes optional add-ons such as 24-hour accident, dental and vision, critical illness and disability income. So this slide that you're looking at right here, we can turn this into a marketing piece for you. We can help you customize it. You see at the bottom, we can plug your name, email, phone number, even a picture if you want one on this. And you can send this out to your clients or put it on your Facebook page, however you want to market yourself. Here's another example. I'm turning 65 in a couple of months. I'll get my Medicare supplement, but my wife is only 60, and she'll have to go through the marketplace or get to get a major medical plan, she's going to pay through the nose. And I think most of us on this webinar here today, we know that early retiree and their spouses, they pay the most for major medical than anyone. As we age, our insurance premiums go up. Aging into Medicare, more often than not, one spouse turns 65 before the other. Most married couples are not, do not share a birthday. So, and then if there's an employer plan that the person becoming Medicare eligible was on, most of those employer plans are not going to keep the under 65 spouse on the plan. If they were to go on COBRA, I think we all know COBRA costs double what it would normally cost through the employer. So that's not cost effective. If they're unhealthy, they may be stuck, and a 60-year-old female with a fully stacked plan with all the optional add-ons, she's going to pay somewhere between $400 to $525 a month for that kind of a plan with limited medical. In the marketplace, I'm guessing it's going to be at least $700, $800, $900 a month. And in this case, she'd have to do that for 5 years. What if someone's late paying their premium for their marketplace plan? What happens there? They don't give you much grace period, I can tell you. I know many people that have told me that they were somehow they ended up being late on their premium. Coverage got canceled. They actually found out when they took a injured child to the emergency room. Oh, by the way, your coverage isn't in effect. Good time to find that out, huh? So the good news is there's no enrollment periods with these limited medical plans. You can sign up whenever you want to, middle of the month, beginning of the month, end of the month, doesn't matter. Because if you do lose your plan for being late on your premium, there may not be a special enrollment period for you. You may have to jump through a lot of hoops in order to be able to keep. How about the faith-based plans? They advertise quite a bit. Are those for real? Well, I know some agents that are involved with these. Unfortunately, they are not insurance. They're not filed with or reviewed or regulated by the state insurance commissioner. There's absolutely no guarantee the claims will be paid. And you can't even refer to yourself as an agent, nor use the word premiums. And most of these types of plans require some sort of moral code or church attendance. And I don't believe they're covered by E&O. It does avoid the mandate by being faith-based, but I think if there were one scenario where a claim didn't get paid through those, you'd see a mass exodus off of those types of plans. Alrighty, the human factor. We all know we're creatures of habit. We like the path of least resistance. We're identifying the objections out there, the possible objections. Because we're creatures of habit, we like the path of least resistance. We don't like to shop around. It can be a pain in the neck when it comes to shopping for insurance. Comfort zone, people don't like to come out of their comfort zone. They like to stay with names of carriers that they're familiar with. All the big names, the Blue Crosses, the Priority Health, the United Healthcares of the world. I guess people feel comfortable because they've heard of them before or maybe had them before. But over the last 10, 15 years or so, society has really become conditioned to these major medical plans. It's kind of like the Pied Piper, isn't it? When you get a minute, go ahead and Google the Pied Piper story and just read the short version of that. I don't have to retell the story, I don't think. But these are some of the objections you're going to run into out there. Because let's face it, you're not going to be able to win everyone. But this is the paradigm shift that we're talking about. These are the mentalities of folks. I run into it almost every day from agents telling me their stories or even myself. So we're used to going and getting our care, letting the providers and the carriers determine how much we owe, and I don't want to have to deal with it myself. I don't want to have to call the carrier and waste 15 minutes on the phone. And the other one, this is a big one as well, what if I end up needing a tremendous amount of care? Well, the chances of that, we talked about it. 2 out of 1,000, 0.002% are the chances that approximately, give or take a thousandth of a percent, right? Not very high chances of that happening. It could. Again, reviewing what the clients need. They want to save money on their premiums. They want to save money on their out-of-pocket costs. They want to be able to enjoy their benefits sooner rather than having to wait for that unbelievably high deductible to be met, if it ever gets met. They want to be able to enroll year-round. They don't want to have to mess with networks, if possible. We're trying to simplify people's lives. So how do we assess the needs? This is a form that we have on file. We can share this with you. Before you write a quote, you want to properly assess the wants, needs, and even the budget of your potential clients. Again, very similar to doing Medicare supplements. If any of you out there do that, I think most of you do. But just let us know if you'd like a copy of this. We'll be happy to share it with you. It's going to help you be able to put your best foot forward when offering up a quote. Again, just in summary here, the lower rate increases. I'm on one of our limited medical plans, and I believe I had about a 5% rate increase. Not a big deal. I don't have to worry about huge rate increases. We can keep people out of the penalty box as well, which is only necessary for the rest of this year. We do that with a separate component called MEC, M-E-C, for minimum essential coverage. That meets the ACA mandate. We'll talk about that one later on in the series. No networks. You're going to probably have higher retention with these clients. And these plans are guaranteed renewable also, so you don't have to go re-sign them up next year either. As long as they're happy, you're happy. Higher commissions with renewals, and we'll give you the comprehensive training in order to be able to market these plans successfully. Again, I want to thank you. I don't want to go too much over our time limit here today, but there is our contact information. You can reach myself, Dan Greer, or reach out to Christy Strauss if you want more information, if you need help, if you had somebody in your office or on the phone looking for health insurance and you need some quotes, feel free to get in touch with us and we'll help you as much as possible. And again, I want to thank you for your attendance today. Be sure to join us next week, same time, same back channel, and you'll get to hear from Christy, and she'll be going into the details on our guaranteed issue, no pre-existing conditions clause, limited medical plan from FlexNet. Very exciting to be able to offer this. I'm telling you, folks, there's a big paradigm shift coming. You can start taking advantage of these opportunities now, and we're here to help you get equipped to do so. So we look forward to hearing from you, and thank you for joining us today. Any questions? Let's see. Yeah, okay. We have all kinds of resources available. Make sure to let us know, and we can help you. The marketing piece, we'll be happy to get those prepared for you so that you can start to utilize them. Have a great afternoon. I'm going to sign off, and we look forward to next week with you. All righty. Thank you very much. Have a great day.